This is Brian Kaplan. I'm editor of The Banker magazine. I'm here with Daniel Marlowe, who's the Africa editor for The Banker. And one of the missions of the magazine is that we try as far as possible to attend all the major multilateral meetings that are held every year. And of course, we're always out in force at the IMF World Bank annual meetings in October. But also we try and go to as many of the regional development bank annual meetings, which are normally held around about April or May. And Daniel, you've just come back from the annual African Development Bank meeting, which was held this year in Abidjan in the Ivory Coast. So give us a little bit of feel for how many people went to the meeting and the kinds of topics that were on their minds this year.
Well, in many senses, this meeting was perhaps the most important up to now. I think officially the biggest one as well, 2,500 delegates expected overall.
And it had a certain amount of significance, I think, by being back in Abidjan, where the bank used to be before the troubles in the Ivory Coast.
That's correct. And in fact, their intention is still to move back from Tunis, where they're temporarily located.
And why do you think there were so many participants this year, if you say it's the biggest number yet?
In terms of reasons, it wasn't particularly clear, but it seems as though there was more of an effort on the part of the bank to reach out to as many observers and to as many officials, both private and public sector in Africa and even outside Africa.
But the bank is becoming more active in the region, and I gather there was some plans to raise more capital, which would obviously give the bank greater reach to do more things in more countries. Is that right?
That's correct. In fact, it was officially approved a 200% capital increase. The bank's ultimate aim is to become the lender of choice throughout the continent, basically competing head-on with the World Bank in terms of funding various projects.
But not the private sector banks, though.
Not the private sector banks per se, but certainly projects that are geared towards economic development throughout the continent. So that's their sort of overall aim. The 200% capital increase goes towards that. They've also introduced a climate change facility, which will help countries throughout the continent face the risks and challenges that are posed by.
And is the thinking now that they should do more of their lending on commercial terms, or should they be doing much more in terms of the soft loans that traditionally have been associated with development banks?
I think it's taken the form of a few things, actually. It seems as though they're looking at developing sort of private sector, commercial enterprise sort of sector, if you will, throughout the various countries of the continent. They're also looking at funding infrastructure projects which are a sort of a glaring hole, if you will, in a lot of countries. So they're very much driven towards driving sort of fundamental change.
Basic economic development, yeah.
Indeed.
Now you mentioned climate change. I mean, clearly the impact of climate change can be felt the worst in some of the poorest countries of Africa. Mm-hmm. Is that right? So what kind of approach are they taking to climate change?
The climate change, I think, has been looked at in a variety of ways. I mean, the economic impact of climate change itself is something that I think is very much on the minds of many governments throughout the continent, in terms of how that might impact, let's say, on agriculture and what they're able to produce on a year-to-year kind of basis going forward. And also in terms of how the various regulations that have been put in place by sort of multilateral organizations throughout the world are having an impact on what industrial development can actually take place in Africa.
Now, obviously, at an annual meeting of the African Development Bank, you'll have all kinds of participants there from across the board in all kinds of industries. But usually there's a lot of people who come from the commercial banking sector. I mean, give me a bit of a feel for how they're feeling about their business. Are they relatively optimistic about the future, given that most African countries came through the crisis in relatively good shape?
That's indeed, and that's actually a real source of optimism for them. I mean, the sort of overall growth rate for the continent last year was still positive. It still reached 2.5%. And given the fact that there are a number of areas that still need to be developed, I think you get the feeling that many banks view many opportunities in terms of funding projects, in terms of promoting greater regional integration and how they can actually, push ahead with trade finance projects. There is a great deal of optimism on the part of banks based in the continent and actually outside. So that was probably one of the most impressive things to see. There were also a number of sort of so-called Western banks that were present, and they obviously seem very interested in what can be offered there. So.
Okay, thank you very much. Well, at the Banker, we'll be reporting on Africa over the next few months. In particular, in our IMF issue in September, we'll have a major report on Nigeria. So we look forward to hearing how the continent progresses in the next few months.